Hey guys, this is Javier with the Geopolitical Investing Cafe and just trying to get rich here in Dallas, as always. Getting free, man, being free, striving for it every day. It's a beautiful, crisp, cool evening here in Dallas, Texas. Just walking around. How many people actually walk around at night? Almost nobody's out here. But I'm out here. Looking for trades, looking for deals, trying to get rich. I enjoy the hunt. A lot of businesses around here. We are in beautiful central Dallas. You can see over there, that is the Mercury, very famous restaurant in Dallas. Just wanted to show you guys around, and this is just an interesting article in light of some of the comments that I got on the video about the puts on GLD. Of course, keep in mind, guys, I bought those puts Monday of last week and sold them on that Friday. And this is just very interesting because I knew and had an inkling the price had to go down. I'm not a rocket scientist. You don't have to be a rocket scientist to know that the price is probably going to go down when it's on its way to more all-time highs. I know gold's going to go to 6,000. Not sure when, but I know it's going to be soon. But in the meantime, there's a lot of volatility, guys, and you can benefit from volatility. You can also lose from volatility, and this is an interesting article about that. Trading options and just doing it according to the charts over the last few weeks, and I have made a pretty good amount of money in proportion to the portfolio that I have for options. Of course, I'm starting very small in that, and I have made a good amount of money at the end of this week shorting gold, GLD. Of course, gold went to all-time highs, and it had to come down. It did come down on Friday. I made good money buying puts. And this, guys, it's interesting, the comments I got in this video, and a lot of them were right. They said, you're crazy if you're buying put on GLD. Made some money. Hope you sold Friday, which I did. China's loading up on gold to back up their new digital currency coming out. They will use the gold to fund poor countries. I don't think it's going down anytime soon. What has been going down, guys, and it's had a lot of volatility. It seems like gold just could not lose in 2025. The GLD, the largest gold ETF, had surged over 30% in just 2 months as traders flocked in, driven by inflation concerns and tariff headlines. Spot gold found itself well beyond the $4,000 per ounce milestone for the first time ever during this rally, fueled by both institutional and retail interests. Guys, by the way, something the Austrian economists have been telling us for years, including people like Peter Schiff and Jim Rogers and others, gold has to go up, and of course that is due to the devaluation of currencies in one way or the other. It could be direct, could be indirect, it could be that people are facing more uncertainty and expecting more turmoil. That's what happens to the price of gold. For GLD, these dynamics created a volatility trap. Volatility this week has been wild, guys. Volatility is good when you're trying to sell an option, but not good when you're trying to buy an option. So for GLD, these dynamics create a volatility trap where both call and put options have become absurdly expensive. And again, that's why I've refrained from trading options this week. When the correction finally arrived, it came fast. GLD crashed 6.4% in a single session on Tuesday, October 21st. I'm still glad I was out. This marks the largest single day price decline since April 2013. Largest single day price decline since April 2013. So again, there's a lot of volatility even when gold, or GLD, which matches gold, is on its way up. The morning of October 21st, Spot Gamma founder laid out this exact scenario. This is clearly a stock up, volume up paradigm. Volume is likely to contract if and when gold prices contract. What makes this a volatility trap? Extremely expensive option prices force traders to make a difficult choice. Should they choose to play the game, either pay heavily for premium or risk being short options by betting against volatility and selling them as good during volatility. If a trader bought puts during the frothy gold rally or GLD rally, they could actually see their position lose value despite a major drop in the underlying asset. Again, just very interesting volatility in this market, and it's interesting to trade or take a break from trading while we're looking for that big geopolitical bet. So guys, still watching the markets, still trying to get rich, and we'll see what happens tomorrow as we go into the weekend to plan the next week of our trade. And I will see you throughout the weekend to lay out what I'm planning to do in these markets. See you soon, guys. Peace out.